So here's the deal. We need to talk about Wall Street starting to intensify short selling on almost everything EV related. That's right, Wall Street is attacking our portfolios. But never fear. Which stocks are the most at risk and why? How to protect yourself, and should you be shorting too, are all questions I will answer for you today. And if you're new here, I'm Luke, and I'm sorry, but I don't try to stretch out my videos with fluff to stuff it with 3 ads. I'll just give you the information you need, and hopefully that is enough to earn your like and to get you to subscribe to this channel. And I'm not a hype channel, so if you don't want the truth about your favorite stocks, then there are other channels that will blow smoke up your tail if you really want that. Actually, in the winter, sometimes I stand on the vents when the heat turns on. And this just took a weird turn. I'm sorry. All right, so which stock is the most at risk in EVs? Thankfully, there's no need to guess. They post the statistics online. So here's a list of the most shorted stocks in the market at the time of making this video. As you can see right here, 3 of the top 5 most shorted stocks are EV stocks and favorites of the retail crowd. You know, that's me and you over the past year. Blink, Nikola, and Workhouse are those 3 stocks. And yes, I pronounce it Nikola, it's kind of a running joke on the channel. And then it balloons up to 5 of the top 20, adding Arcimoto and Canoe, and 7 of the top 30 if you keep pushing this out, adding Lordstown Motors and Fisker. But what about Tesla? Well, they were nowhere near the short interest compared to these stocks. Well, NIO has to be in there, right? Nope. Didn't make the list either. So why are these 7 stocks being chosen out of the dozens of EV stocks that have run up massively over the past year? Well, here's the reality with any real-world game-changing technology as it relates to stocks. Not all EV-related stocks will go to the moon. Actually, the opposite is what is actually true. Most will outright fail or get bought out, and not for favorable terms, guys. It won't be a good buyout. Some will be mediocre at best, and a few, just a handful, will actually go to the moon. We have seen it with every great revolution in technology. The best thrive, some do okay, some tread water, but most fail. So looking at this list, these are the stocks that Wall Street feels will most likely be the ones that fail, and short sellers are trying to pick them off. Can that change and they turn it around and even go to the moon? Absolutely. Just a few years ago, Tesla was the target of massive short selling pressure as it was struggling, and I think that turned out okay, don't you? So what are the specific reasons why the 7 listed are under pressure from short sellers? Well, they all have one or more of the following problems, which makes the risk-reward profiles of these stocks really actually poor for now. And you don't have to have more than one to have a poor risk-reward profile, and a couple of these have multiple problems with them. So problem number 1, they either serve a very niche market, meaning unlike Tesla, whose total addressable market is massive, the market for many of these stocks' products is small at best, meaning there will not be great revenue growth in a growth stock. That's a problem, my friends. Problem number 2, they do not have the demand from large buyers. Sure, hype channels absolutely try to play up the what if game as if it's actually going to happen. But even if they guess right on 1 or 2 of those, how does that propel them in the future beyond those 2? Having a couple of large contracts is not enough to send any of these stocks to the moon. Now, maybe a hype run up, but not a true shot at the moon. Problem number 3, some of these companies do not even actually produce a product. Elon said it best, prototyping is easy, production and scaling is hard. It almost killed Tesla, so it stands to reason not all who are not producing yet are going to make it. Problem number 4, margins and profitability are not projected to be great with some of these stocks. The reality is, although a charging network is absolutely critical and supported by most governments, that does not mean the product that accomplishes that is wildly profitable and justify these higher valuations. There are plenty of in-demand products we cannot live without, but the stocks are not great performers due to low profitability and low margins. And speaking of profitability, most on this list have no clear path to profitability. In the end, with stocks, it's about making money, and many of these stocks have no real idea when that will be beyond just a pure guess. The path is not clear, and that makes these stocks vulnerable. I am not saying all these stocks are terrible and will fail and are just terrible investments. However, I have been saying since the beginning of the EV run last summer that some of these things I just mentioned are major problems, and these stocks need more than just hype to actually go somewhere over the long term. And I got crushed in the comments section on those videos for saying it, but hey, it comes with the territory of doing this whole YouTube thing. It's just part of it and doesn't bother me. Hopefully those people that were blasting me did not buy the hype train and paid $40 for Workhorse or $90 for Nikola. I wish no one to lose money like that, no matter what they call me in the comments section. I just don't want that for anybody. So how in the world do you protect yourself, and should you be shorting these stocks instead? Both of those are great questions, but first, a quick word from our sponsor for this video.
For the player bank from Hoodies, your company here will grow.
Alright, so how do you protect yourself from short sellers? Well, first, realize you cannot control the short sellers. However, you do control what you invest your money in. Do your due diligence on these stocks. I know last year due diligence and valuations didn't matter. That is not normal, and that was absolutely an anomaly year. I've been at this for over 20 years, and I've heard the phrase, "This is the new normal," many times. And guess what? It never is over the long run. Valuations always eventually matter. Don't know how to do a proper valuation or how to do due diligence on a stock? It's imperative you learn right now if you want to avoid getting eaten up in this market. Google it. YouTube is a great resource. We have courses in the private group on it too. But you don't have to pay to figure this out. You can do it all completely for free. But no matter what you choose, it takes hard work. There are no shortcuts and no app you can just punch in the ticker and it tells you great stock or not. It just doesn't exist. Learning this and putting in the work is the only way to ensure the company you have your hard-earned money in is protected against short sellers. It cannot prevent the short sellers from coming, but it will ensure the short sellers get burned. Now, should you be shorting these stocks? Well, the shorter answer is absolutely not. Short selling is a short-term game with unlimited risk, and it's very difficult to do successfully. Do not fall for the lure of get-rich-quick plays like shorting stocks. We are long-term investors here, and that is how you build real wealth by picking great long-term stocks. So thanks for watching, and we'll see you in the next one.